Hi again, Jeremy Peterson here, broker for Vesta Real Estate here in Ogden, Utah. Today I have an update on the market for you and wanted to talk about some interesting things that happened last month in Northern Utah real estate. If you followed our last video, you'll remember that we discussed the direction that house prices are going and how long we think they might go in that direction. We came to the conclusion that it might be towards the end of the year when we see the market start to shift more towards a buyer's market and away from a seller's market as that market pendulum moves from one side to the other. So the data for May is back, and I wanted to show you some things that we found that are very interesting. So let's go ahead and cue our first chart. So this first chart is our sales volume, and this goes all the way back over 20 years. You'll see that that red line is the trend line and shows that over the last couple of years, sales volume has sort of slowed down. We are peaking in volume about the same level where we were during the 2007 bubble. And so things are moving sideways and things are getting a little choppy. I'm going to cue another chart here that shows you what sales have done year over year for the same month. So this chart shows you what sales have done for the same month from the year prior. And if you notice, 2017 was kind of choppy. That's why we saw that flat trend line in the previous chart. Things were up and down, kind of mostly down for 2017. And 2018, though, the first 4 months, things really took off again and accelerated with sales volume, except for May. If you look here, sales volume was down about 10% for May. So what's going on with May? Well, let's look at the next chart, and we might be able to draw some conclusions from that. The normal cycle, or the normal pattern for real estate, is if things are going well, you will see prices increase or improve during the spring. Buyers come into the market around March after the snow melts, and then they get into a buying frenzy up and through about July, and then things start to slow down a little bit in August. And by Labor Day, when school starts, most people want to be in place, and so sales volume starts to decrease, and prices don't increase much after the summer sales season. At least that's been the pattern for the last while. So what I did was I took April and May to show what direction the prices were going for all the years going back to 2004, which is when I got into the market. And you can see here in 2004, the market was in the dumps. There was a lot of short sales and a lot of bank-owned property. This was at the tail end of a recession, and the housing market was just beginning to recover from that. In 2005 and 6 and 7, you can see that from April to May, prices increased each of those years because the market was improving. Then we had 2008 with the burst of the bubble. Prices were declining in spring. And then we had this weird year in 2009 where prices went up. If you remember, that was when the federal government came out with their income tax credit. It was like a $7,000 or $8,000 income tax credit to incentivize people going out and buying homes in the middle of this housing market collapse. So that distorted the numbers that year, but the decline resumed again in 10 and 11, and you can see from April to May in 10 and 11, prices declined. Finally, the market bottomed out. So in the springtime of 12, 13, and 14, prices improved between April and May, each of those months. In 2015, this was an interesting year. I actually thought that we had peaked out in 14 and things were going to mellow out and we were going to move sideways for a while price-wise. That was a head fake, and prices resumed their upward trajectory. So in 16 and 17, you can see house prices in the springtime increased dramatically. But take a look at this year. Look at May, April to May of this year, 2018, and we have a very interesting drop in house prices from April to May. So why is this? What happened in May of this year that was different than 2016 and 17? Well, for one, buyers at this point are being tapped out on house prices. And so they're squeezing every penny they can to afford the housing that's out there, and they're competing fiercely for this housing. Because the competition is so fierce, it means that people are pushed to the limits, and any change in affordability is going to affect them. In May, we saw interest rates increase significantly. There was quite a bit of an increase in interest rates in May. The other thing that affects home buyers is gas prices, especially commuters, and gas prices surged in May. I believe it's mostly gas prices that affected this drop in housing prices over the month. I pulled the data for Salt Lake and Davis counties, and their prices actually increased from April to May, but Box Elder County and Weber County both saw declines from April to May this year. So very interesting. I'm pretty sure gas prices had an impact on people's decision making when they determined where they wanted to live and how much they want to pay for the home that they have to drive to work from. So anyway, very interesting. We'll see how June and July's figures work out. Gas prices are not predicted to go down very much for the rest of the year, so this may have a permanent impact on prices, and maybe keep increases from surging too much before the end of the year. So let's watch and find out, and we'll discuss some more as the data rolls in. This is Jeremy Peterson. Thanks for tuning in.